got our real estate roundup for this week, which is the three I's dominating today's real estate space, being interest rates, inventory, and inflation. So wanted to dig into these because, like I said, all of these seem to be a revolving door right now with which one's grabbing the headlines. Jay, you're in the lending space. Let's start off with the interest rates because you have even better experience than I do pertaining to what that space looks like.
Yeah, interest rates are, we're starting to see them kind of flatten out for the time being. Interest rates are always predicting worst case scenarios on the future. So the more turbulent currently we are, the more turbulent our real estate our interest rates are going to be. And usually that means they're going to rise because you got to have the same view as the banks. They're wanting to essentially make sure they make money for the long term. And so if they expect there to be some tumultuous activity in the market or world events or whatever it may be, they're going to raise interest rates to kind of hedge their bets against a more poor economic outlook than would be otherwise. So we already knew there's going to be some Fed hike rates, all that boring stuff. But then on top of that, there was a war in Ukraine. So
let's talk though. How does interest rates affect the average home buyer today? So without like all that jargon, because I can imagine most people are just tell me something that relates to me, because you can blame Ukraine on this and that, and the Fed does this and that. But if I'm looking for a home right now, what do I need to know?
Yeah, you got to know that your options need to be a little bit broader than a 30-year fixed. Now we're going back to those times where an interest rate, you're going to have better interest rates at, say, a 5-1 ARM or a 7-1 ARM. And
what's a 5-1 ARM?
5-1
ARM? I'm
yes.
a first-time home buyer.
Yes, first-time home buyers out there. So 5-1 or 7-1 ARM haven't been too popular the last few years because interest rates have been so low. But a 5-1 ARM, essentially that 5 part means that you have a fixed interest rate for 5 years. And then that 1 part on the end of it means that every year after that, the interest rate will readjust based on an index and the index and the, I drew a blank. Basically, it fluctuates though based on what's going on in the market. So,
and
market, better
ARM
interest rate.
For
adjustable rate mortgage.
Okay.
But with that, again, 7-1 ARM, 5-1 ARM, that 5 and that 7 means you have a fixed interest rate for both the 5 years and the 7 years, respectively. The shorter that initial period, the better the interest rate because they're not worried about basically losing money on that. It's a short-term gamble for them.
So are you saying if I got a loan today for a 5-1 ARM, which is, again, a fixed rate for 5 years, that'll give me a better rate than the 7-1 ARM because, again, it's a shorter term?
That's what we're starting to see. Yep, that's what we're starting to see. So, and that's how it's been historically with the ridiculously low rates that we saw these last few years. A 30-year fixed and a ARM were about the same. Banks didn't want to offer too much lower in interest rate, or usually about the same interest rate for an ARM because they didn't want to effectively lose money for the next few years. So
how about, do you have any unfortunate real life examples of individuals that maybe you were working with or you heard someone else was working with in your office where interest rates affected their ability to get into a house recently?
Yeah, it's definitely becoming a bigger and bigger thing as interest rates. At one point last month, interest rates rose 0.5% in just a week. And so with that, if your interest rate is higher and you can only borrow up to a certain amount of debt to income, right? Your mortgage can only be up to a certain portion of your income. So if you have a higher interest rate, that means that your monthly mortgage payment would be higher for that amount of money, meaning in order to stay below that threshold of what you can be approved for, you have to either lower the loan amount or buy down your interest rate again. So that's been the biggest thing, is higher interest rates mean less people can borrow as much money as they were able to prior to that interest rate hike.
So when you say buy down interest rate, let me get this straight. So interest rate, let's pretend 5%. and I say, but Jalen, I heard about these 3%. You're saying I can buy down, and maybe not even to 3. Let's just use 4, 1 full
Sure.
percent. You're saying I can pay you money to go from the current rate of 5% interest rate and get to a 4% for my mortgage to make that payment more affordable, correct?
Yep, we're paying whatever bank we're getting your loan
How
through.
much?
Depends. And that usually
Okay.
depends on your credit too. Your
Okay.
credit is if it's a factor of that, and also the loan amount. There's
Right.
basically a lot of factors that have to be taken into account, and so you want to make sure that you're
Can you
seeing
give a
those.
ballpark? It's going to be in and around this, give or take 2,000, or give and take even 5,000. Is that big of a wiggle room?
Yeah, it can really be. It can be big. It can be
Give
a
me the
big
best case
wiggle room.
scenario. I have the perfect credit score, and I want to buy down a full percent. Best case scenario is it's going to cost me how much to buy down a full percent?
Probably a couple percentage points, so 2 to 3 to 4, again, depending on everything, but at least a couple percent of the loan amount. So say you're 500,000, in order to get that, a couple percent would mean, 5,000, 10,000, maybe even
5,000 with the best credit
15,000.
score.
Yeah.
Okay.
Yep.
We're not
That's
talking
how it
about
works.
hundreds of dollars. We're talking
Yeah.
about, yeah.
And it comes down to, at that point, what's your break even point? A lot of people go, oh, I have this much lower interest rate. I'm saving this money per month. It's like, no, you spent $10,000 to get that interest rate. So if you saved $100 per month but you spent $10,000 to save $100 per month, there's a break even point of when you actually are really saving money. So
Yep.
if you're say in the military and you're going to leave in a couple of years,
Right.
does it make sense to buy down the rate if you're going to move in 2 years, but the break even point's in 5? It's like, well, no.
Yeah.
So
for those listeners that are absolutely maybe lost right now, this is why you
over
lean
your
on
head.
professionals and ask
Yeah.
questions,
Oh,
because it's not your job as a prospective buyer to necessarily understand all of it, especially initially, but it is your responsibility to know what you're getting yourself into and to know your options. And
Yep.
so that's why it's important to surround yourself with good people who know their space well, so they can offer you these options and explain them in an individual one-on-one meeting to make sense of this, because I'm sure for many listeners it becomes very complex very quick, and there's like, Jay, you had me lost at buy back, like,
Yeah.
or buy down, and it's like, what?
100%.
So
Yep.
yeah, what is simple for
Yeah.
you and I to comprehend is difficult for the average, which again is no discredit to anybody. But that's the complexity of this space,
Yep.
and yours and my responsibility to understand it, so we can look at different options even when interest rates are going up.
Yeah. And be more
wanted
creative with it.
to,
So
yeah, creative but legal, right?
Yeah.
It's not doing
Yeah.
things, saying, gosh, I hope nobody looks at me right now and exposes me. It's
Yep.
perfectly legal. It's just understanding the rules of the game, right? You can't win
Oh, yeah.
unless you know the rules of the game you're playing with. And
100%.
too often people feel like there's only one way to tackle something or to address something. It's like, no. But if you work with someone who's very well versed in what to do and how to go about doing it, they're going to be able to go at it a couple different ways.
Yep. Get you to where you want to
I
be.
also, yeah, and I also wanted to touch on the black and white of interest rates. I've said this a couple times, but wanted to share it here too. A full interest rate change, and let's pretend they increase in this hypothetical situation, because they are in reality. They bump from 4% to 5%. For those prospective homebuyers, your buying power fluctuates in and around 10%. So again, what does that mean dollar wise? If you were comfortable with a monthly payment of a $500,000 home, you're just like, yep, that gets me what I want. And in California, let's pretend it's a 2-bed, 2-bath at 500,000, and the interest rate again was 4% on January 1. And now we're saying, oh nope, it's 5% now. That means you need to look at a house that is $450,000, right, to keep that same monthly payment. If that maxed you out and you're like, I can't afford anything more than that, you now need to look at a house that's in and around $450,000 to keep that same monthly payment. What does that mean? That means home prices, unfortunately for you, have gone up, which means you are probably not looking, if you're looking at a 2-bed, 2-bath, it's probably a little bit farther of a drive, right? versus where you might have been looking on January 1. It might mean that you're looking at a 1 bed, 1 bath now, or a 2 bed, 1 bath.
Yep.
So
Compromise.
it's your ability to A, be informed, and B, you might have to compromise. What are you going to give up to get in?
Yep.
And there's always that give and take. But that's the black and white portion of how do interest rates affect your life as a prospective home buyer. It's a 1 to 10% rule. Jalen, anything to add on that?
No, I think we covered it as superficially and with all the important stuff without getting too bogged down in every little detail. You can definitely do that with interest rates. Talking numbers on a podcast can definitely be hard to follow very quickly. So, all right.
Again, lean on professionals because that's what we're here for. And I think not enough individuals, and Jalen, maybe your experiences are different, but I feel like not enough individuals use us as resources. Ask questions. It's free to pick up the phone or to shoot an email or to text and say, hey, would you mind answering a couple questions for me on this? Because there's nothing worse than feeling like you're alone. You're the only one that is dealing with it, and that's that. So
yeah, 100%. Always just reach out. Email, text, phone. It's a lot easier to get your questions answered now versus being like, oh shoot, apparently I can't own a home now. That's what I'm hearing on the news. So,
right.
Maybe not. So
Jay, real quick, actually, wanted to actually hit on interest rates going up and inflation because we haven't dug into inflation. Thoughts on anything you've come across pertaining to how home prices change pertaining to interest rates and or inflation?
Yeah, well, the less money someone can qualify for, the less desirable those more expensive or the houses that were kind of on the edge of being affordable versus not affordable, saying like $300,000 house, but more people could offer a higher could do a higher offer because they could get qualified for more money. Now that that's slowly going away, it means that home prices are starting to, and I mean, they should be, we've all been expecting it, but they're starting to not be jumping leaps and bounds above where they were before, where it was like, oh yeah, we're putting in 20,000 over asking price or something like that. It's everyone has to be smarter, including sellers. They can't overlist a house like they could before. People don't want to overpay if they can't finance that overpayment. So you're definitely seeing that. And even with people that put more money over asking price, that's only about 20% of houses anyway. And that's kind of how it's been for most of this crazy time. So all the people that have been saying, housing prices are skyrocketing to the roof and stuff like that, it's like, yeah, but generally they're about where they were listed at. They're not going for too far over, and by too far meaning like a full percent over or a couple percents over what the listing price is. So inflation's definitely starting to cool the market and pushing a lot of the people that have been waiting, and now they're not comfortable with their payment anymore. And so those people are pushed out, which is creating a less competitive market as well.
I'd like to jump on the back of that one and make mention of a couple graphs I've come across recently, and that is when interest rates have gone up, home values have continued to go up. I think a lot of people assume, economy is bad and interest rates going up and inflation up, so that means house prices are coming down. At least that's not what we're seeing to date. And that's the facts being the facts, not my opinion saying, well, I think that might happen. So again, listeners out there, be mindful of where the facts lie and where opinions are just shared with nothing behind them, because it's important to note home prices do not automatically come down just because we're dealing with this inflation within the economy and with interest rates going up. Home prices have continued to go up. Why? Because supply continues to be low and demand continues to be high. So that's the reason behind it, or the very simplistic reason behind it. And just be mindful, again, don't assume home prices are just going to have the bottom drop out from underneath it, because we've dealt with that. And I'm speaking from looking at a graph right now since 1993, that home prices have continued to go up even when interest rates have risen. What will come down, and Jalen alluded to this, is the amount of homes sold, right? And the amount of homes going over listing price. That slows down, understandably. Why? Because interest rates take some people out of the market altogether, let alone just slows down buying power.
Yeah.
Right? So, like you said, what some people were willing to put a bid in 100,000 over listing price for 1.3 million became a 1.4 million. Nowadays, interest rates are changing that buying power, and so things aren't selling for as much over list price. So,
Yep. And then I have a quick cautionary tale. I had a guy that was not wanting to have his monthly payment over 1,600, including everything, wanting a condo. So he was looking at about $230,000 condo. This was before interest rates increased. He said that he wanted to wait against the realtor and my objections. He said he wanted to wait to save up enough money to have the down payment that allows him to stay under his threshold and buy maybe a little bit more house. That plan is completely out the window. Interest rates have risen over a full percent since the last time he was, seriously thinking about it.
Yeah.
And so no matter the amount of money he can save, he's never going to catch up with, oh, I want $1,600 for my total monthly payment at this price point. Like, well, that house is appreciating and your interest rates are going to continue to go up. So either you have to buy down the interest rate, do whatever it is, but it's now unattainable to get that house for that price with that amount down. You're going to need to save more money down now. So this is one of the many cautionary tales of just waiting and thinking that the market's going to get better, the market's going to crash, the market's it's not going to happen.
I'm going to share another horror story that happened recently that I was informed about, and that was an individual finally got their offer accepted, and while they were in escrow, interest rates rose. The rate was not locked in, and the rates ticked up, and ultimately they had to withdraw their offer because by the time they were about to lock in rates, they had tried to buy at the max at their highest point, and they had changed enough that it changed their monthly payment, and they had to back out. So there's nothing wrong with the house. Inspections came back fine. It was just when that's the reality. If you don't know your budget and you don't have any wiggle room, understand that, especially this day and age with interest rates doing what they're doing, unfortunately, talk with your lender and understand exactly what numbers you're working with. So that's not you, because that's an unfortunate reality for this day and age. Again, especially for those ill-informed individuals. And maybe by that person's situation, maybe it's just absolutely bad luck. Nonetheless, it happened, right? And it's an experience that I'm sharing with everybody now, saying, don't let that be you. So.
Yeah, that's a bit rough. Yeah. Not locking the interest rate while under contract. That's pretty crazy. Okay, so let's touch on the very last one, and then we'll move on to our business bookend. So inventory, and we've touched on it quite a few times now, but give us a quick summary, Nick, of what you're seeing with inventory and what the national average for inventory is looking like.
Yeah, inventory nationally is in around 2 months of supply. And for the novice individual, they're just like, what does that mean? All it means is that if everything froze today, it would take approximately 2 months to sell all the homes that are currently on the market. Why does that matter? Well, in a quote unquote neutral market, it's not buyer, it's not seller. You ideally want in around 5 months at least. Ideally even 6 months worth of inventory. So for those, again, those pessimists out there, just like, bubble. In the mid 2000s, we were about in around 9 months of inventory, and depending on where you were in the country, up to 10 months of inventory, which ultimately translates into black and white. That's a lot of homes in comparison. So again, we're at currently 2 nationally. California, we're hovering in and around high 1s and even bottom 2s right now. And that's the facts being the facts. So again, what does that mean? It means it drives prices up. Why? Because it's low supply and there's a lot of demand to live and have their own piece of the pie. So That's
Yep.
that's inventory.
That's inventory.